Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, May the 20th, 2025. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4 hour, the 1 hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview. Wave one is done. We're working on our way down in a big deep retracement to a wave two, which is roughly at a 78.6% retracement. That comes from the May 7th of 2007, I should say, May of 2007. We bottomed at 70.53. Our destination was to be reached somewhere around 115, 120. And at the time, I didn't know it would take like 15 years to get up there, but we ultimately reached the destination at 114.72, 115. That's pretty good. And we are in the process of breaking back down. I still think we're probably a few years away from this retracement reaching this low, but so far we're kind of holding at what typically is interesting from this low to this current high, which was the COVID low, to the current high. That's a 618 retracement. So once we start breaking below this, Randy, man, we got some major downside that opens the door toward that 85, 82, and ultimately where we think we're headed down to around 80. So this is an important level that we eventually take out. Jumping over to the charting platform, we can see why that level is so important. Let me go pull this out a little bit further back so we can see that COVID low. And from this COVID low up to the current swing point high, there's your 618 retracement. And that's exactly where we came down to bounce off of. So I don't think this is over while we're just kind of grinding in this little parallel channel here. I don't think this is over and we're ready to go breaking out, but it is a 618 bounce holding, which if we start breaking some highs and we go back near this high over here, then yes, we will go breaking some new highs. But as far as this bounce now, I think it's going to end up with a lower high, lower low. But I would be remiss if I didn't call your attention that it is a 618 bounce that's holding. I'm always watching for 618 bounces, but just because it holds temporarily doesn't mean it can't break down further. The plan, as you well know, got to condense this way down for us to get down here around 82 to 78, somewhere around that 80 range. And there's that extension. So Randy, what happens if we go up here, we break that 618 and we get a candle body, not the wick, but the body starts closing below that 98, especially this 786 level and 94 area, then what's it tell us? We got a 75% chance we're going to 85, 70 plus we're going to 82, and that's right in the wheelhouse of where we think we're headed. So this is why the break of this 618 level is going to be very important. And if you take it out to a higher time frame and you look at the prior swing point low we showed you on the MetaTrader chart, that 70 and change area back in 2007 over here, actually 2008, right, this one, January-ish of 2008. So when we bottomed here, we go up to the high. We're looking for somewhere between a 618 and a 786 retracement. Where does that 80 come from? Hmm, right there, right at that 80 target. So this is why we're looking for this deeper retracement. But if you look at the wave one coming down to wave two, what's after that? Again, this could still take years to get down here, but after that, the dollar should go breaking new highs. Not all-time highs. We go back in the 60s or 70s. I think it was up to like 160 or so. Let's see if I can go out to a monthly. Yeah, we were up in the 160 plus out in 87, not the 60s, in the 85, 86 area. So we went all the way to like 167. So it doesn't mean we necessarily have to break all-time highs, but it does open the door for the dollar to go considerably higher into 120s, 30s, 40s. Maybe we get real feisty and we go breaking out to all-time highs. But again, we're still got years of a correction to the downside, much less to talk about once it reverses and we start going higher, where are we going to start targeting up here? We shall see. All right, so drill down. This is why this level was important and why we believe we're going to do a 618/786 retracement zone. I'm pushing deeper than just the 618. That's why I'm kind of targeting that 82 to 80 range in this area. But again, you must be cognizant of the COVID low to swing point high. That 618 is holding. So until we start breaking below it, the door is then ajar to go down to where our targets are. So you betcha I'm watching that very closely. Now let's drill into the current hard right edge and where's the dollar likely headed? We've just been grinding. I kind of drew this a few weeks back that we're just kind of grinding in the zone. Let me kind of stretch that out, move this up a little bit. So we're just kind of stretching and grinding. And I said this could even potentially take some weeks for this thing to play out. If we start closing below and we start taking out this little swing point low over here, then it sets the door for us to go lower. But if we continue to just bounce in this zone, we might continue this for a few more weeks and we try to make a run toward the Magic Fibo up here. We're kind of overdue to visit that Magic Fibo. We haven't visited that Magic Fibo in quite some time when we finally broke through back in March. So we're talking April, May, June, almost 3 months, working on 3 months, beginning of March. And then we did rally towards it, which I kind of mentioned we might test it there. We fell a little shy. So at some point, we need to come back and visit. So I would not be surprised to see more of this grunting, grinding, laboring rise as we continue to watch this kind of chop in the zone. And parallel channels are not the most strongest of your technical pictures. Trend lines are the weakest, but then when you put a parallel channel, it's two of them. So it's a little bit stronger than your typical just single trend line. But I would not be surprised to see this kind of grunt and grind in here. So that means the euro dollar and pound dollar may in fact pull back a little further while we do get the final little push. But then the result is we should get a higher low on those to go up, and this should get a lower high and start breaking back down. Now, of course, we can watch this a couple of different ways. From this low to that high, we still need to go back below 99 area to set the tone. Well, from that low to this high, hey, we're starting to break down. Then the door would be ajar to go visit 97 and potentially this 96, maybe even upper 96, lower 96. So this is why I'm watching if we start breaking out of the trend channel and we start closing below 99 on a daily candle body, not the wick again, then maybe this is the end of this push. And again, we fall short of our Magic Fibo like we did over here. But up and until then, we're still kind of holding. And if I look at this low to that high, which I don't have it on here, it gets so many lines, but we're right at a 618 and we're kind of holding that from that low to this high. We're holding that 618 right now. So we're stuck. And this is why this is kind of telling me we're more than likely Yes, we could just go breaking down. That's why I'm watching if we start closing below 99. So you might want to put a little sticky note on your trade station and have a note there. If we start closing below 99, then look for us to start grinding lower toward 97, 50-ish, and maybe toward upper 96s. But if this continues to hold and we start grinding up, then this may continue for a few more days to weeks as we potentially make a run toward that magic Fibo up here. And again, this could take us into June, several more weeks, maybe even July. I mean, so far, you can use this little tool down here. This guy right there, let me move that up just, oh, not that, wrong deal. This thing right there, and you use this little tool, and you can click on this candle and pull it that way. So this has been 21 bars or 29 days, 21 trading bars or 29 calendar days. And that's basically a month, and we're not finished, right? This thing could drag on and do another one of these, which would push us into late June, potentially. So this is what I'm kind of thinking. A lot of chopping, grinding, laboring rise. I'm watching this zone. We dip below, we close below. We're kind of testing again the lower half, but let's see where we close. So in conclusion, in summary, if we start closing below 99, which we're at 100, so a good point plus, we start closing below 99, then it shows we're breaking out of the trend channel, and from the prior low to high, that 618 level is hovering in that zone. So it kind of sets the tone. If we break below that, then we're likely going to 97, maybe upper 96, which would mean we're likely going to go get a new swing point low. If not, which I'm leaning more towards, we're probably going to grind and continue this for a few more weeks, maybe even draw it out another 21 bars or 29 days, and we start pushing toward the magic Fibo. What I'm not looking for is a breakout in order for us to start thinking, uh-oh, well, maybe that 618 off of that COVID low is truly going to hold. Then we need to really start seeing a break above the swing point before we start going, aha, we're going to make some new highs. And that would take us, A, we got to get above the magic Fibo. B, from the prior high to low, we got to take out that 618, which is roughly the magic Fibo, up to the 786, which is up here about 106, this big pink box. So if we can grind and keep going, break the magic Fibo, go up here and break this pink box, then the door is ajar to go up to see some new highs above the prior high here. And we'd be targeting 111, 113. And if we break those, then it sets the tone for us to go breaking above that 114 and change up to that, as we showed you earlier, up here toward that 117, 119. But again, that is not, I repeat, that is not the direction I think we're headed. So zoom back in. I think we're going to grind over the next several weeks, longer. I said this would take, probably could take us into summer, maybe even the thick of summer. So this would be a few weeks to a few months minimum, few weeks, probably push us out to a few months. And we come test the magic Fibo, but I'm still looking, the bigger picture is all of this chopping, overlapping price action is going to give us a correction to then make a new lower low. Now, again, we do not have to see this go up higher. It's not, it's an absolute must, but it's more likely than not, unless price proves otherwise. And from the low to the high, you start breaking below that 99, and that's that 618 retracement back down off the low. Then the doors ajar again to go to 97, 96. Got it? So this is the levels I'm going to be watching. We start closing below 99, then it's probably a good bottom reversal on the euro dollar to go higher, the pound dollar to go higher. And if not, we keep grinding up here, then that euro dollar, pound dollar will continue to pull back and looking for the buy as we're looking to sell this rally. we're going to be looking to buy the dip on the euro and the pound. Speaking of euro and pound, isn't it amazing how we went straight to our target zone? We talked about how many months ago, Randy? Ian, James, Mr. Tucson? When we started getting above this 108, I said, hey, if you're real conservative, wait until we start closing above this 108.50. Then you can target about 600 pips area to go up this 113, 115 area. 75% chance, 70 plus percent chance, and sure enough, where to go? Boom, right to those targets. Technical picture is a beautiful thing, especially when you understand where and likely where it's headed. So again, the dollar index has a trend channel forming from a bottom and trying to climb higher. The euro being an inverse pair is doing the opposite. It is topping and we have a trend channel in a downward direction. So if the dollar does climb up and visit that magic Fibo, then the euro is likely to come down here around that 108, 109 area to come visit the magic Fibo as well. So if I end up seeing that, this would be a good buying opportunity, in my humble opinion, for the next leg up, which would be not only to revisit these targets we already reached, but to work on its next extension up here around that 118.50. So is this over and this is the beginning of this bottom reversal and we're breaking out? Or is this the beginning of a little A? We climb up somewhere in the zone, get a little higher B, and then we come down in C to finish that move. And then we go breaking out, starting to shoot for that 118.50. Again, if we're down here at 109, for example, this magic Fibo has been kind of grinding higher since this big pop. And if it holds and we come down and visit, maybe it's the upper 108s, 109 area. Well, that's still several hundred pips just to get back to the old targets, which we already reached. Then we start taking out that swing point high. And sure, there's some extensions up here, 116, 117, but we should just grind and grunt, labor and rise on our way up toward that 118.52. Fair enough? Any questions on that? Pound dollar. Well, the reason I'm still bullish on the pound is for the same reason, that high to low. When we started breaking above that 129 and change, which was over here, we said we have a 75% chance we're going to 136. Well, Randy, we made it good ways there up to that 134-ish. So we're less than 200 pips away from the first target, but we didn't reach it. So guess what? We're not done. This is still an active target. What if we do this type of scenario where the dollar grinds up to the magic Fibo, the pound pulls back, the euro pulls back, and again, these are sloping upwards, so the longer it takes, this could be still rising. So what if we do that? Are we still going to reach these targets? Yeah. That 75% chance is not over. It doesn't expire because you fizzle out a little short and say, well, that means we're never going to reach it. No, it's just part of the corrective nature of the markets. And also the software was telling us we're getting a little top heavy after that big move. We're getting a little top heavy. We need some depressurization to then get another push higher. So this target is still viable. We started breaking above these levels, that 138 level. Then we got 142.50 up here for the next extension further up the food chain. Fair enough? So I know there's a lot of lines on here, but just focus on the levels that I'm giving you and the magic Fibo. This is critical to have on every chart. This thing is truly magical. I have found, like over here, Randy, sometimes you break, you go up, you come back, retest, get a push, then you come back, test again for the double tap before you then go soaring higher to where we made the recent highs into 2024 there. And then we got our bigger correction we talked about. Now we talked about a bottom reversal here. What a beautiful move. Well, I don't expect we're coming back to these lows and make new lows. No, I think we could come back and do a double tap over here like we did there to warrant us exploding up to these targets and even potentially up to that 142. Well, maybe we do come back down here. Well, what if we did? That's salivate country for a buy opportunity, because even if we come back toward that 2930 area, that gives us 600 to 800 pips just to get to the original targets, and another 1200 pips or so to go beyond that to go up to that 142. So you're talking a couple of thousand pips by the time we get way up there from 130 to 142. Not too shabby. I like it. And especially we get a pullback down to 130. Now we're talking 2,200 pips, well, 1,250 pips or so. So a good thousand plus. But where did we start? I kept saying the markets are primed for this thing to go popping. And we targeted the Magic Fibo. We got a little pullback. Then when we came back and retested this, I said we were likely to test it at least once before we got up here. Almost reached it. Now, do we need another one, or is this thing just going to keep grinding up here first, then come back to retest before then perhaps going on that 142.50 area? But I do think there's much more upside. On Tuesdays, we like to look at Elliott wave. And looking at this chart here, we're expecting a pullback, but then what happens after? We should go breaking new highs. Well, in the euro, what we think is transpiring is just a big A going up in B, right? And this is just part of the stair steps waves that are playing out within this bigger move. So my ultimate target, if the dollar goes down to 80, the euro is going to go up to this 140, 145 area. No ifs, no buts, no ands, no exception, in my humble opinion. And if the dollar goes down to 80, the pound dollar is going to make a move all the way up here toward that 160 to 165 area is the plan. Got it? So thousands of pips still left on the tarot. Right now we're at 130 area, 134. So 132, actually, let me see, this is in the way. Actually 133.70 to be exact. So we still have, we go to 163, that's still 3,000 more pips when we started down here at 103. So that total move is potentially upwards of 6,000 pips. I like it. And this is what we talked about a few years back when this bottom reversal. I was like, man, this is a beautiful time to go long the pound dollar because we're going to get a extensive retracement. And even if it's just that 618 retracement, you're talking potential 6,000 pips up there. Wow. And where does that come from? I'll go over to the monthly chart over here. And that comes from the prior all-time high down to that 103 low. And we're looking for at least a 50/618 retracement. So that's why I'm kind of fine-tuning somewhere around that 160 to 165 area, which again could be upwards of 6,000 pips. So when I saw this way back in 2022, I was game on. It's time to go long and stay long for years to come while we literally grind up thousands and thousands of pips. And we were able to peg these pullbacks pretty accurately, as you well know. And again, it ties in with the software. Why were we so bullish when this pulled way back here? Had a monthly oversold, weekly oversold, daily oversold. We got a monthly hook and a cross with steep slope angle separation. That meant we were going to get a weekly cycle up. Then we got the weekly cycle down on these corrections. Now they're continuing to go back up. And currently we're getting a little bit of a pullback and kind of grinding. Look where the weekly is. So this might fit this move right here. We're showing on this little channel that do we pop up here first before we come back down? Or do we just kind of chop and grind, get another lower high here and push lower as the dollar grinds up to the Magic Fibo? This might pull down, but why is that logical? Because look, The weekly's in overbought territory. Yes, the PAI is heading back up, little mini slingshots here, but we're struggling at the same level we reversed from last time. So we could very well get a visit to the Magic Fibo slash 618 retracement via a weekly cycle down. So keep an eye on this. I'm going to look at this in the coming weeks. Do we get a PAI hook? Do we get a trend momentum cross like this? Do we get a PAI hook, get a trend momentum cross? We get slope, we get angle separation. Then if the weekly does that, then it means the daily is going to cycle down. Well, guess where the daily's sitting when you look at the daily chart? Look where the Magic Fibo is sitting and look at the cloud area if you use Ichimoku cloud. So we get the weekly to turn and hook and cross, then this daily is going to turn over, kind of like one of those super slides coming down, and turn over. And what if we get sucked and pulled into the cloud area, which frequently happens, and we run into that magic fib to then bounce and continue our journey toward that 136, 138 target. So keep a keen eye on this. If this ends up holding, we get another push lower based on that dollar running toward its magic Fibo, then the pound and the euro likely to do the same retracement. And even over here on the euro dollar looks very similar, that we came closer on the pullback, but we're still not there. So is this part of a little A, B, C? We come down, touch the magic Fibo. This daily turns back over, continuing as the weekly is trying its best for the hook and the cross. It's kind of pinched and there's not a lot of angle and separation. That's why I don't think this is ready to go breaking out just yet. Based on this weekly beginning to hook and cross and my daily not finishing the down cycle. You said, well, the trend momentum made it and red and blue made it, but money flow did not. So what's likely going to happen here is this is going from a slingshot up to a slingshot down, and this will go up and then turn back down, and ultimately we'll get that push lower and likely going to get a lower high, lower low, and a little A, B, C type of move where we come back and revisit that magic Fibo. Now, admittedly, the more we start to decline and push lower like we did here, the slope starts to lessen. This was on a steeper slope here when we were ripping to our targets. Now it's starting to flatten out a little bit more. So if we get a lower high and we start grinding lower in the coming weeks, this will probably start to flatten out a little bit. But this looks like a good area around that 108-ish to then look for a nice little buying opportunity like we did down here. And remember, when we talked about that, we said, well, once we start breaking above 108, we're going to go to that 113, 115 target, 75 and 70% respectively. But long before we got to the 108, I called that bottom. After I saw this higher low here, kind of a double tip, double bottom, and watched price action, I was like, yep, I'm going to go ahead and call this bottom in place even long before we got to that 108 target. And I can show you on the charting platform over here, that was pretty easy one to call because we started to see this consolidation area and then we dipped down to a higher low and reversed very quickly. And the software was still saying, no, man, we're going. That weekly hook and across meant the daily had to cycle and the daily was nowhere near cycled in this zone. That's why I trust the gauges. And sure enough, it ultimately went right where we said. Amen? So in closing, any questions on the dollar index? Again, I'm watching this very closely. Unless we break below 99, then we could start talking a new low, which then the euro would start grinding higher and the pound would. But I'm not convinced that this pullback is over. I think it's part of this correction that's still ongoing. And likely we're going to keep grunting and grinding within this parallel channel and make a run toward the magic Fibo. That would make a beautiful move. And I'd love to see it where it rallies and grunts and grinds and we just chop in this zone for several more weeks into summer. And then this will start flattening out a little bit again. The more we start grinding higher, the slope starts to lessen. And we get something like that, maybe around that 103-ish area. So maybe another 2 to 3 points. And then we go for the big sell. So I'm looking to sell this rally in a continuation down as I am in inverse looking to buy this dip on the euro and the pound. And I'd love to see it come back to visit the Magic Fibo. That would be a beautiful area. Plus, it fits beautifully with the low current high. There's my 618 area. So we come down toward that Magic Fibo area, which is in the zone of zero point 0.5 down to 786, this big green box here. So this would be a beautiful move from the low to the high. We get a measured bounce off the Magic Fibo, which comes back in this retracement zone to set the tone for the next extensions. Again, on the smaller scale, we're talking 116, 117. On the prior scale, we're talking 118.50 up there, which if I can condense this a little bit more, now you can see it. All right. So keep buying the dips for weeks, months, and years to come. It's the question is, when is the dip over? I would love to see, based on the software, that's the key, that this daily ends up grinding all the way to oversold. So when we talk about a cycle, we get a weekly hook and across the daily cycles. What is a cycle? It's the PAI, talk about AI, PAI, power of AI. The price action indicator pushes to oversold, and it is red, blue, and green money flow. It is not just red. It is not red and blue. It's red, blue, and green. So this is not a cycle here. Yes, the trend momentum one has cycled, but it's both. So this leads me to believe, well, the only way this can finish a cycle is this is going to have to go up from that slingshot up to a slingshot down, and then the momentum will push this trend momentum two down along with trend momentum one flipping back over, which we saw here on the way up. It touched, it flipped over, and then continued. It did it again as we were slingshotting higher, reaching those targets. So this is why I'm watching very closely, and I'm leaning more toward further downside because we did get a weekly PAI hook and we got a trend momentum right at a cross. There's not a whole lot of angle and separation, but it's awfully close, close enough to warrant our daily cycle down. And again, this is not it. The PAI is fine, but the money flow portion of it is not. Red and blue made it, but not the green. And that's critical component. It's all three. That's why they're there. If it was only two necessary, I'd only put two. It's all three. Got it? So expect this, Mr. Tucson, to grind up this way. So maybe the euro chops and grinds a little bit as the dollar chops and grind. And then we go slingshotting down. And what does that mean? That means this blue line and red line, you see the red line starting to cross above the green right there? We use my big cursor. That red line's passing above the green line. So what is a slingshot? When the red and blue race off from green money flow and snap back. Well, this one is going from a slingshot up, and I expect to see this red line turn over in the coming days, maybe week, and then turn back down, and then this trend momentum that's turning up and this one flattening out, that'll turn back down. Trend momentum two, which is this yellow and aqua, will turn back down, and everybody will meet beautifully down in the oversold territory, and price will push us down into the Magic Fibo arena to set up a daily reversal and us to buy the dip. So one thing I love about this software is inside the trading platform, you can go into the expert advisor properties and you can set your stop loss, take profits, etc., based on the move and where we expect it to go. But I could set this in ready to trade mode anytime and expect when I do right here, this position trigger, any trigger's a good trigger, these little triggers down here. When they oversold, you get these, let me move that first. Oversold, you get these triggers higher. So I can automatically set the software to buy that. And in ready to trade mode, we get a trigger long. That's exactly what it's going to do. So right here, you go to your settings and you say, I want to buy a trigger long. That's it. I don't want a trigger short. I don't want a slingshot long. I don't want a slingshot short. Even though we're talking about short term, this thing will probably slingshot back down and make a little move. But I'm more interested in buying the dip so I can set this software, set it and forget it, leave it in ready to trade mode. So when it finally gets this trigger long right there, true, it will go ahead and fire. So it could take days or even weeks. And when this gets to oversold territory, and this gets back to oversold, you'll get these trigger phenomenon that fire. Like here, we were oversold, oversold, they all over the place. Over here, oversold, oversold. So that's when you get them. And then, of course, when you're overbought, trigger to go short, overbought, overbought, trigger to go short. So it works both directions. And again, most recently, during this correction, we talked about this, reaching those targets. There's your triggers, and we were overbought, overbought. The great news is this thing cannot fire a trigger unless this is oversold and this is oversold. Amen? At least in oversold territory, which that is not oversold territory. It's more down in this area. Got it? All right. So I'm going to leave that in ready to fire mode. And again, what are we looking for? We're looking for a bounce to go not only hundreds of pips back up to the original targets we reached, but the continuation onward and upwards toward that 118.52. And pound, same thing in reverse, is that it too, we haven't even reached those targets like the euro did yet. So should we get this pullback, great, love to see it. And then we could buy and look forward to several hundreds of more pips. Otherwise, I'm still in. I've been in it not only on this latest bounce, but I've been long the pound dollar ever since this big reversal down here in 2024, 22, excuse me, when we did reversal at 103.80. And I'm going to stay long until when? 26, 27, I don't know, until we finally get up to our 160 target, 150-ish, 160-ish target up here. And then what? Then I'm going to go back short for years to come and look for this thing to come back down. If our dollar is going to go to 80 and then reverse and go breaking out above 115 is the plan, then what do you think this pound dollar is going to do? It's going to go up here when the dollar is dipping down to 80. And then when the dollar reverses from 80 and starts moving back above 100 and 120, etc., this baby is going to go from somewhere in this 150, 160 all the way back down to these lows and make likely a parity type of move lower. So you're talking 6,000 plus more pips to come back down to these lows and even make a new low. And again, that is years out. That might not happen and can, end up down here until 2030-ish. We shall see. But that's how I trade this, one day at a time, 1 week at a time, 1 month at a time. And I have multiple Forex accounts. I have cash accounts, I got IRAs, I got Roth IRAs, I got tons of IRA accounts in Forex, as like I do in most of my trading accounts. And I trade some the long picture, others we take the buys and sells and the moves lower. So how do you get away with the FIFO rules in the US? You go to your broker and say, okay, here's a 20,000, 10,000, and I want to break this into 4 different accounts, 4 2,500s, or you do 20,000, 4 5,000 accounts. Then I can have some accounts where I'm trading long, some accounts where I'm trading short, some accounts where I have the big move that I continue to let it run. And while we get the setback of pullbacks in those accounts, I have short trades running in another account to take advantage of the correction. So typically I don't just buy and, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. I leave some of these bigger pictures just set it and let it run for years, to run thousands of pips. And during those drawbacks, he's like, well, that was pretty good. Went from 35 to 20. That was seven plus 100 pips. That's a lot. And you go, well, I could be short in another account. And I warned you about these pullbacks. So that's when I set in other accounts, let's trade short here. Then when that's done, I could buy the dip and add to my position. In the other accounts, I have these long standing ones. I buy dips and continuations. All right. Dollar yen, looking grinding, grunting, looking at the daily, kind of warned you about this. I was looking for this likely to start grinding toward the Magic Fibo. We just missed it. So we still need this to break down a little further, but you'll remember the conversation we had, Randy, several weeks back when this low and that high, we started closing below that 146 area. We talked about that saying likely we're going to 136, and this thing made a move downward of 700 of that 1,000 pips. And now we're just getting a correction to a lower high. I still wanted to see maybe one more push to reach the Magic Fibo, get into this rejection zone to end up with the next leg down. So I don't think this is finished and we're ready to do that. I think we're correcting. Why? Because the dollar's been correcting upwards. So if we get that last push on the dollar to run toward the Magic Fibo, I would not be surprised to see this dollar yen do the same. Excuse me, get up into this 48, 49, maybe 150-ish zone, and then sell that rally going back down toward the 136 target, which we're still got a 75% chance we're going to reach. Amen. So this is typical ebb and flow of the markets. And why were we expecting that bounce? I warned you about the bounce and I said we're likely coming down here. And sure enough, when we broke that level and had a candle body close, we did 700 of the 1,000. That was on cue. So now what? Lower high, lower low. Is this the end or we need one more push? If I get that last push and the dollar pushes up toward its Magic Fibo, then expect the dollar yen to follow suit to rally up toward the Magic Fibo. Then we can look to what? Buy the euro pound to go higher, buy the dollar yen, or in this case, sell the dollar yen for this thing to continuation down to its original target, that 136, 134 area. What about the pound yen? Still expecting more of the same. I'm really not looking for this to go breaking out. When we start to see the dollar start cratering back down, I suspect you're going to see the yen start to strengthen a little bit. And I would not be surprised to see this correct a little further. Could we get another pop higher? Sure. Only way I start getting very bullish with this and say, wait a minute, the pound's going up here to 211, 214. Maybe, because typically when our markets go ripping higher, as we got the big, it was the tariffs. The tariffs is what made our markets crash. Terrible thing, the tariffs. It's going to make people buy more expensive goods. You know about a tariff, my friends? If you think it's too expensive, then don't buy the goods. You're not paying a dime on tariffs. So if it's too expensive, don't buy it. Kind of watching avocado prices. I mean, sometimes you get decent sales and prices here and there. I love avocados. But when they're too expensive, I'm just like, well, just skip and eating avocados for a little bit until they come back down in price. I'll eat something else. I digress, but the point is this ready to go breaking out? We still have this downtrend of lower highs, and that's not real conducive. I do know when the markets, and we're talking about Elizabeth, I'm coming to join you, honey. When we get that big move, what happened? The yen strengthens. When we got the big tariff push lower in the Dow, the NASDAQ, the Russell, everybody went tanking, thought it was a market crash, market crash. Well, it's all about the tariffs. And what happened? The yen went way down and then dipped out of here when the market started reversing. So could we possibly go breaking out? I won't say it's impossible, but I do think we got another market correction coming. And I'm going to go over that in very detailed review here. But be careful on this. We're stuck between these lower trending lines, lower high trending lines. And I do think we're going to go much lower in the future. Certainly when we get our big market to then give us the Elizabeth, I'm coming to join you, honey, I do suspect we're going to get some massive downside. Because typically when the markets are crashing, people run to the yen for a safe haven. Got it? Typically what happens, you typically don't see the pound yen going ripping to all-time highs during a financial crisis. And you can go back in the history and see when we had COVID lows and then the 2023 pullback in 2022 and then later in 23, see how the markets kind of pull back along with the S&P and our big markets. And then of course I got to go to a higher time frame, but you go back to 2007 market financial crisis up in here. Look at what it did. It went up here from 249 down to 119. So typically that's when I'm short the pound yen, dollar yen, the yen based pairs, because typically the yen is in the secondary position. So trading Forex, I don't want to be short the yen, meaning being long this pair. I want to be long the yen, which means we sell the pound, buy the yen, strengthen of the yen. And that's typically during the dot-com bubble burst, right? 2000, coming in at 2000 range, we started tanking down. So when the markets crash, typically they run to the safe haven of the yen. All right, so be careful on this, back to current price action, that we might see a little bit more upside, but I do think the market's going to give us the correction. At least that's my hope. And that would give us some more downside on this pound yen during that correction. Then we get a blow off top on the markets and maybe the yen goes up. Still not thinking we're going to break these levels until price proves otherwise. We got to get above 200 up here. See my 618 up there? So Randy, we start closing above 200, then by all means, we'll start targeting 211, 214. But I think a correction is coming. So be careful on this. I think there is more downside. Maybe we get the last little pop, then we get the drop. So speaking of markets, let's jump in. I want to show you this. This is of interest to me. And we have SPX. This goes back into the 2000 market crisis, financial crisis, when the bubble, real estate bubble burst. Notice this price action right here. We were coming into this area, got a nice little correction. We went on to make a new high. Then we came in and got this bigger correction, which on a 3-day, notice the time frame is the 3-day. We came down and bounced off the 3-day Magic Fibo to have it basically a V-shaped recovery to go on to make new all-time highs. And it wasn't by much. It was only about like 20 points or so. Before then, Elizabeth, to come to join you, honey, came the big financial crisis. So this price action is looking awfully like what we're currently in, but it's on a bigger scale. So notice this chart, same thing. And let's go to the weekly chart. So notice this. Let me zoom this in for you. We can see this a little bit better. But this looks awfully eerily the same. We got this pullback. We went on to an all-time high, barely, but we did make a new all-time high. Then we get the correction. This time it wasn't the 3-day we bounced off of, it's the weekly. And notice this little red candle here, pull back, and we're kind of reaching out. So I don't want to see this. I want to see a 3-wave correction come back down into the 618 retracement zone, which would put us somewhere in that 5,400 to 5,000 range. And then we go blasting off for that blow off top, going to that 64, 6,600 zone. I much prefer to see that than a continuation grind higher. And notice, you got the pullback, you got a higher high, then the big bounce off the 3-day, and then we got a little red candle. This is off the weekly, but look how eerily the same this looks back in the 2007 financial crisis. Here was the tariffs. It wasn't tariffs back then, but we got that pullback, bounced, went on to make all-time highs to set up. Oh, here comes the big one. And this baby, when it got started, it was ugly, right? Drag that on, and you thought, ooh, whoa, ladies and gentlemen, look at that move down from way up here all the way down here. That was over a 50% decline. I'm thinking that's what's coming. Is it today, tomorrow? I hope not. I don't want to see this grind to all-time highs to repeat this, because then I think we're going to get that, Elizabeth, I'm coming to join you, honey, much sooner. I much prefer, and this is on a bigger time frame too. That's you got to be warned about the downside. And I'm not telling you this thing can't grind and we go up to new all-time highs again. This thing can look exactly like that financial crisis of 2007. And then as it was all-time high, ooh, you need to keep buying. We're going to 7,000. We're going to 10,000. Buy. While all the big dogs are loading up with puts. We learned that previously. I lived through that one. So watch out that this more than likely should give us a three-wave correction. So does it have to? No, it does not. Would I like to see it? Absolutely, I'd like to see it. Because then we could get our correction back down about 54, 53, 50, between 54 and 5,000, get that correction down, and then we get the blow off top going into late fall, end of the year type of thing. If this baby just keeps grinding and grinding and grinding, and we go make all-time highs, I'm not quite sure we're going to make it quite to that 66, 6,500. We'll probably move toward the 62 area just to make a slight higher high. And then what? That could set the tone for that's the end of the show. And remember, what did that do on a 3-day chart? Ouch. And it took quite some time when we finally broke down till we finally got to the March 2009. Well, if you really look at this on a bigger picture and you go back to the financial crisis of dot-com bubble burst, so we take this all the way back, Randy, all this was a multi-year three-wave count. And that's what I think is coming. This is your A. You got an expanded flat double top type of thing up here. Expanded flats have to go at least 90% of the down move and can exceed it and go up to about 105 is kind of the sweet spot between 90 and 105, which means you can make a new all-time high. Anything above 90% retracement would be expanded flat. And then we got our big C wave down, right? And we made a new low. Ouch. And that was substantial, right? You're talking from that high to the low was over a 50%, almost about a 60%, close to 60% retraction from the prior high. And even this one, we did kind of the double top scenario, but that's just a big ABC. And it started in 2000, and we didn't go breaking all-time highs until like 2013. So that was like a 13-year before we saw all-time highs again. Right? I'm showing you on the weekly chart, but what we just showed you a minute ago was on the 3-day when we made that bounce in that 2007 retracement. So be careful that we got the bounce, we did the recovery, made a new high, and then look out below. This thing could take longer because it's happening the same thing on this chart from the weekly perspective. And this thing could last much longer. We could go 15 to 20 years of a big correction down. And it's not all down, right? Going back over here, we had not only some couple of years of a down move from the dot-com bubble burst. You come over here 2000, and then we started bottoming. Let me get my toolbar out of the way. We started bottoming a couple of years from 2000 down to 2002. Then we went from 2002 for about 4 years, 4 to 5 years of just kind of grinding along, grinding and grinding. Then we topped out in for another couple of year decline, but the whole correction, A, B, C, took upwards of 9 years. That's a long time. And then it was 13 years before we went to all-time highs again. So this is looking eerily the same, especially if we, as we zoomed in at 2007 financial crisis, if we started climbing higher, make a new high, without that correction coming back down, this could happen sooner than later. Whereas we get a three-wave correction, so let's go back to current price action, and we'll look at this one here, that if we get this three-wave correction down, great. Then it sets the tone for us pushing into the fall, into end of the year. Maybe the next Santa Claus rally pushes us up into that 64 to 6,600. So if you've been following us, I still think we have a much better chance we're going to get this correction followed by the next big surge into late fall, end of the year type of thing, where we make a move towards 64 to 6,600. That's where I think my blow off top is going to take place. Then we get the beginning of the Elizabeth, I'm coming to join you, honey. And remember, I don't make predictions because everybody predicts. I'm not a prophet. I leave that to the prophets, but everybody, the weatherman, the golf analyst, this analyst, every analyst, everybody else is always my predictions, my predictions, my predictions. I don't get hung up on that. I anticipate with the best of them, but my statement, my anticipated move before we break 7, we're going to break 4. Got it? Before we break 7, we're going to break 4. And that fits this blow off top into the mid 6s. Then the bigger decline below 4. And where are we headed? See this Magic Fibo line on the weekly? Well, the only one that is below that 4,000 target happens to be the one on the monthly chart. So this is minimum how far we're going down, right? Minimum. So that could be the first A wave. Then we get several years of a retracement back up in the B wave. Maybe we go to all-time high and expanded flat. Maybe, don't have to. But then we get the bigger move down, and that could bring us not only below 3,500, that could bring us down into this zone somewhere between 25 and 1,500. And what is that exactly? That's the plateau of where we started this breakout, right around that 1,600 area. So who's to say we don't get an A, a B, and a C, and we don't end up way down here by the time it's done? If it is, anytime we start getting in this box, if it plans out that way, this is a huge opportunity to buy quality companies at hugely discounted prices. And the good news is we can make money and we don't have to sell short. We can use puts, of course, but we can do ETFs, inverse ETFs, to trade to the downside on these, where you just buy it like a stock, an ETF, and you buy the inverse ones as it starts plummeting, they go higher, or etc. You can do the shorts, play the shorts when it goes down. It exaggerates with some leverage to the downside. Many ways to play this. But that's the exciting part. We can make money going down. We can make money going up. We can make money all kind of ways. Amen? But that's what's frightening me, that we're seeing the duplicate move, what transpired back in the last financial crisis. The charts are lining up, looking just like it. So you zoom this in, and it really looks like that picture I showed you. We kind of dipped, went in to make that reversal, and then we get this dip down here. And then what happened? This went on to make a new slight all-time high before Elizabeth, I'm coming to join you, honey, the big one. So this is why I want to see this correction now, not this thing continue to climb higher. So if it does, look, and let's play both sides of this. What if, William Bruce, this baby just keeps grinding, we go to all-time highs, and we start making slight higher highs. I'm starting to shift not only all of my investments out of this market because I expect a big reversal, but I'm going to start setting up with some long-term reversal action that should take a few years to play out. Not a matter of it's going to go tanking down in a few days and we're down at 3,500. No, I think it's going to take years. Amen? All right, so be careful on this. Look, in my humble opinion, that maybe we could keep grinding. I do not want to see that. So I almost want to say it's not going to happen because I don't want to see it. But if it does, you know what you should be doing. Get your affairs in order because then we're expecting that big one to come. Amen? All right, let's look at ES for those that trade E-minis. We're in the danger zone. We went toward the stretch. Remember, I showed you this last week that we typically can extend just a little further. And from this low to that high to this higher low, we went on to extend it just a little bit further than an equal move down, right? So this is typical where we start running out of some oomph and we get the correction. And I'd love to see this correction. So Randy, mark this on your chart. From the low to the current high, which I got to move it just slightly because it did go up just another couple of ticks. So from the low to the high, I want to see a retracement come back into the zone of this 54, still in the same zone though, 54 down about 5,000. This big green box with a special emphasis somewhere between that 52.50, 52, it was 52.50, now it's 52.78 because we went a little higher. So I would love to see this baby come down over the coming weeks, three-wave correction of come honing in around 5,300, 52 and change to set up the bigger bounce, blow off top into the end of the year type of thing, as opposed to keep grinding to all-time highs to set up the Elizabeth, I'm coming to join you, honey, on a sooner basis. So we do this scenario where we grind up to the end of the year, then we probably won't see this bigger move until next year. If we don't, and this baby keeps grinding, then we're probably talking about the bigger move sooner. But pay me now, pay me later, it is a coming. And I do not see any way to avoid it. And it has nothing to do with tariffs. Long before the tariffs, because way back in 2010, there was no tariffs and this, that, and the other talk. And we still did the exact same thing. So what are they going to call it? I don't know. They always come up with some name. Maybe it's the commercial real estate bubble bursting. Who knows? It could be a currency like the China's fiat currency failing. They're struggling. Maybe that's why they came to the table and started doing a little tariff negotiations, et cetera, et cetera. So we can have some fiat currency like that fail, and that could be the reason it brings it down. They'll give you an excuse why, but the technical picture is warning you we grind higher first. This is coming faster. We do a three-wave correction down into this ideal zone, somewhere around at 54, 53, right there. Pushing closer to 53 is my liking. And then we get the push into the end of the year where we go up to 64 to 6,600 range. And my call of before we break 7, we're going to break 4 still holds no matter we do this or we do the three-wave correction followed by the blow off top. Still think it's still in the cards. All right. What about the NASDAQ? Ditto. We're in the danger zone. We're reaching the extensions. And could we just keep grinding and we make new all-time highs? Yeah. But one thing this one has that the ES doesn't have is this lower trending highs. We went on to all-time high before we did the pullback. This one made a lower high before the pullback. And this could lead us into grind up into the zone and we get the bigger one. All right. So what are we looking for here? Same type of thing. We would love to see a, whoops, I didn't mean to do that. I want to do this, go back over here. We want to see that three-wave correction come back down, and love to see from the low to the high, somewhere around that 18.4, 18.5 range, as high as, or as low as, well, as high of a pullback as 19,000 to as low of a pullback to the Fibo line down here right around that 17.5 area, but ideally a three wave into about that 18.5 area would be ideal. Then we set off the blow off top, which would put us into the 23 to 26,000 blow off top. So what's it going to be? Do we just grind higher now to get the bit, Elizabeth, I'm coming to join you, honey, sooner? Or do we get this three wave correction and then we get the blow off top into maybe the end of the year, early next year, and then we get the Elizabeth, I'm coming to join you? Well, remember, what are we expecting across the board? Kind of magic Fibo. This is critical. It is magical. And the only place we have to give us some new lows, like on the ES, is the monthly chart. And look where that baby's located. Down here about 10-ish, 11,000. And we're talking blow off top at 23 to 26,000. And we're going to come down and visit this guy. That's the plan. Minimum, really. And if we don't hold that, then it kind of goes back to the same scenario. This looks like a bubble pattern. Ever since that 2007 bottom reversal, after we hit bottom down in 2009 and we started ramping up, that's a bubble pattern. And would not be surprised to see us potentially not only come back to Magic Fibo at this plateau, but if we don't hold that, then we got a plateau over here around that 8,000 range. And if not that, then potentially all the way down here. And you think there's no way you could go from 24,000 down to 6,000. That's what a bubble pattern does. Goes back to the base camp of where this big blowout takeoff took place from. Amen? So be careful. We can see where that plateau comes from. 2000.com bubble burst. And this one where the ES made kind of double top area and then went down and make a new low for the financial crisis. This made a lower high and a higher low. So I would not be shocked if we did get this baby. If it doesn't hold the magic Fibo, then we only have a couple of areas, technically looking at this, only a couple of areas that better hold, because if it doesn't, we're coming back down as a green line. So I'm not going to say this is a foregone conclusion. Bet your life on it? Of course not. But when the big one comes, we're talking minimum back toward that magic Fibo, which again, sitting right around that 10, 11,000, the black lines right there. Wow. From what? 23 to 26,000? That is a huge decline. And then what happens when we get down here? That's some good long-term buying opportunities for the Magnificent Seven, etc. You'll get in some bargain basement pricing for the next push into the 2030s. Potentially, we shall see how that plays out, but that's the danger zone. And zooming in on the current price action, well, Gary, that's great. We're talking could be years by the time we get down there, sure, but we're only talking a handful of months before we get it either way. We grind up, get it sooner, or we get the three-wave correction, bounce, and then we go to that blow off top somewhere 23 to 26,000, kind of what I'm thinking. Then we get into next year, we start to get the bigger decline. Again, we can make money both directions. I would be taking aggressive profits at this point. That's been a hell of a run in that V-shaped recovery per se. And did we peg that one? Remember the 618 off the low to the high? Got a beautiful 618 bounce. And what did I tell everybody? We're going to daily magic Fibo. I mean, that's been on the cards right there. Expect to pull back in the coming weeks. That's where we are now. Before that, when we got our retracement, expect to move down. And then we started saying here, keep an eye on the danger zone. And we said for a long time, we're going to the daily. Expect markets to grind up to the daily Magic Fibo. Still expect it to grind up to the Magic Fibo. Continues to grind to the Magic Fibo. We make calls, not predictions, but we anticipate and make these type based on technical analysis, the software, everything about it. And why are we looking for a correction? It's overdue. Let's go over here to our markets. We can look at ES first, or in this case, S&P. And S&P, we got a daily extremely overbought. We got a weekly in overbought territory. So this thing could grind and grunt a little bit more before we get a turnover. But I think what's coming is likely we're going to get the weekly start turning over and we're going to get a daily cycle down. And that's going to take us a few weeks or so to give us that three-wave correction to come back toward that probably daily Magic Fibo, potentially to the 54 to 5,000 range where we get this correction. But that's why I'm saying be cautious of the upside right now because the weekly's overbought and the daily is an overbought territory, just getting ready to take a move down. Amen. And what happens with this software is what we love is we get a weekly to hook and cross down, then the daily cycles. We get a monthly to hook and cross the weekly cycles. You get a daily to hook and cross the 4-hour cycles. And why is that important? Well, if I'm trading options, a daily takes about 2 to 5 weeks to cycle. So if I'm going to trade options on a type of move where I anticipate a daily is going to cycle down, then I know I need to be at least 5 weeks out because it takes time for a daily to cycle. And a weekly takes 2 to 5 months to cycle. A monthly takes 2 to 5 years to cycle. So what are we talking about with Elizabeth? I'm coming to join you, honey. You can't see it on this platform, but on this one we have more data. So let me jump over here. This one? Yes. Let me come over here and I'll go to the S&P and go to a monthly chart. This one just happens to has more data. But last time we did a full cycle down. That is what? What's a full cycle? PAI, including red, blue, and green, and at least trend momentum one, was in 2007 financial crisis. The rest of the time during these pullbacks was just a slingshot phenomenon. Slingshot, slingshot. Even COVID was a slingshot phenomenon. And then the most recent pullback, slingshot. And this most one right here, another slingshot formation. So what are we talking when we say, Elizabeth, I'm coming to join you, honey? We're talking this monthly will cycle all the way down, just like over here. Got it? So I've been warning about we're going to get another monthly cycle down. Well, this is pretty much the end of this bubble pattern run. So that looks vertical, just like NVIDIA and some of those other ones and micro supercomputers. What did they do? Same type of move. It's a psychology of a market cycle. So we're talking a massive correction to come at least to this plateau area, which is the Magic Fibo here. And if that doesn't hold, then we can start coming back toward this previous low over here from the 2007, 2000 dot-com bubble burst area to where we come back to visit that plateau. Ouch. And we get a big monthly cycle down that could take 5 years. And the more we engage, disengage kind of thing on the way down during a cycle, the longer it could even take. So it's not like guaranteed, well, there's no way a monthly cycle could, in here we could engage, disengage, engage, disengage, engage, disengage, and do this for years. The more we do that, the longer this can take. So maybe we get this plateau down here and it takes several years into the 2030. We shall see. We shall see. But this is expected to come out to play and that monthly is expected to cycle. So what's it going to look like by we get another blow off top? Weekly starts slingshotting back up. We get another blow off top. Then we get the monthly after it slingshots higher with the weekly. Weekly cycles down. The monthly starts turning. The monthly cycles. And we go into 2 to 5 years of a retracement back down. Amen. And we're going to be seeking out that magic Fibo on that chart. Same thing with NASDAQ. Kind of rinse and repeat. We have a weekly that's getting in overbought territory. We have a daily that's extremely overbought. So it doesn't mean we can't grind higher. That's why I don't want to see it. Well, what if we do? What's the software going to look like? This over here. Engage in keeping grinding and slingshot, 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 slingshot. Start grinding. But eventually, what happens? You get your cycle down. Right? So it's coming. I think we're going to get a 3-wave cycle down. We're going to get this daily to cycle down, and we're going to get that correction we're looking for from the low to the high, somewhere around that 618 retracement zone. And then we look for the bounce to go higher, blow off top. Amen. And I'm going to keep a keen eye on this weekly. Once the weekly finally hooks and crosses, we got a PAI hook, red, blue, green line are pointing down, and the trend momentum 1, green below the red, crosses down. We get slope angle separation. So see it right there. We get slope, we get angle separation. What did that mean during that late recent pullback? The daily cycled down. From that pullback, the daily cycled down and even slingshot even lower. That was typical. We warned you about that, but that's part of the process. So we've been grinding. What did we say a daily takes? About 2 to 5 weeks for this thing to make a cycle like it's doing. So you can count these candles. How do you do it on this platform? You use your pointer and you can click on that candle and go up to that candle, and it was 30. So there you have it. That's in our 2 to 5 weeks cycle. And that was in the 4-week range, about 30 days. So it's accurate. Go back in history. That's why options traders love this software, because once you get that hook and across, the percentages are extremely high. You tie in it, go back to our charting platform, you tie into that our extension retracement Fibonacci zones. It sets it up beautifully with the Magic Fibo. That Magic Fibo strategy is a thing of beauty. In closing, be careful. We need the correction. I promise you, you want the correction so then we can get the blow off top, as opposed to we just keep grinding to then look for the big one to come sooner. But I do not see any way around it. We're going to get this, that much bigger, time consuming, multi-year correction is coming sooner. I hope we get the shorter term correction that might last a few weeks to a month or so. And then we start getting into, from summer to fall into the year, we get that blow off top. All right. Is it possible this could be the end of the all-time high? We never see all-time highs for quite some time, and this is already it. If this correction is not 3 waves down, it ends up being 5 waves followed by a 3-wave correction. So let me stretch this out for you. If we end up seeing this correction that I think is coming, and it turns out it ends up being 5 waves, and I'm not trying to do it up to scale that it's going to be that deep, but we get a 5-wave correction followed by a 3-wave back up, where we end up with a high, low, 618 retracement rejection, then Houston, we got a problem. We're not going to see a blow off top. So A, we get a 3-wave correction, we get a blow off top. Those two go hand in hand. Love to see a correction last a few weeks, if not a couple of months into summer. And then from summer to the end of the year, we get that blow off top pushing back 23 to 26 zone. You see my target, 23 to 26. That's where I think we're headed. First things first, we need a correction. If not, and I know I'm repeating, we just keep grinding higher, then we're probably not going to get up with that 24 to 26 range quite as high. We will get an all-time high followed by the bigger one coming sooner. And I don't want to see that. Lastly, so number one pick of mine, my number one choice up here is we get the three-wave correction followed by blow off top into late fall, early next year, right? Santa Claus rally, maybe throw that into next year. That's my number one direction. But what's critical, we see this pullback first. Other one, yes, we can keep grinding higher. That's the one I don't want to see, even though it's all-time highs. Woo! I don't want to see that one because we're going to get this thing coming down much sooner than later. And lastly, I don't want to see a five-wave correction out of this, followed by a three-wave back up, and then we look at the high, the new low, and the lower high. Then that sets the tone that we won't see this, that the beginning of the big one is already underway. And of those three, I want to see the blow off top preceded by this three-wave correction, then the blow off top. Only one that is different is the Russell. Russell's in the danger zone. I'm looking for a correction to come back down. When our market's correct, I think the Russell will correct too. But then what happens if it goes for the blow off top? This is the blow off top for the Russell. We're going to come back down somewhere around this 19 to 1800 range. So we get our little three-wave correction somewhere in that zone. Maybe we push it a little further. We could even make a new low. Before then, we get a rally back up into late summer, end of the year. But the blow off top for this Russell over here is this prior move toward that 23 to 22 area is where I'm thinking. So when the ES gets to 64, 66, NASDAQ does what we think is go to 23 to 26, then this guy will end up rallying toward 23, 22 to 2300. Then we get the big one. What's the big one? We're coming back below 16, and my target's down here between 14 and 1200. So, Mr. Tucson, we get up here. That is a hell of a decline from 22, 23 area down to 14, 12 area. Wow. Big decline. Most people trade this by IWM. So what are we talking here? Same type of thing. Let me zoom in for you. That we're in the danger zone. I know there's a million lines on here, so just don't worry about it. We're looking for a three-wave correction followed by the pop into the danger zone. So this one, as we zoom in, I'll make it big for you so you can see that. Stretch that out, bring that back over here. And we're talking the danger zone is up here in that 230 to 220 area. So it's roughly 1/10 of the RTY. So you got 2111, 2110 in that range. So we're talking somewhere around 216 up to about 230 area. Got it? So, Mr. Tucson, if we get what we're looking for, we get our little three-wave correction, Randy. We come down to somewhere around that 186 area, little 618 retracement. We bounce and get the blow off top on the respective markets, the ES, S&P, ES, NASDAQ, Dow, Nikkei. We'll all get those blow off tops. This blow off top would be at a lower high because we're nowhere near all-time highs. And I suspect that blow off top would put us into this danger zone to set up the much bigger move. And on this one, it was 1400, 1200. So now we're talking 140 to 120 area. So we could do a put spread, go out as far as I can go, get this baby to come down. We're definitely going to go breaking 160. That's this huge green line right there. We're long overdue. We had all this overlapping, chopping, grinding, overlapping action, and we're ready for what? The big flush down to 140, 120. And if that doesn't hold, we could even go down to last line of defense is like that 110. The doors ajar to even go lower if that doesn't hold. But my target's going to be 140 to 120 from 230, 220 area. So when I set an alert up here and I say, I want to know when IWM is trading at 220, 225 and above, look out. I'm going to do a put spread to the downside and I'm going to push it out as far as I can go. Now remember, no buy, sell to hold recommendations. I cannot tell you what to do. I can only tell you what the charts are telling us and what I am willing to do. Disclaimer, when I'm long certain things, like we are, TSLL. Hopefully you're taking advantage of this because it was just a minute ago when Tesla's bounce came in the picture, and Tesla has the announcement coming this summer, supposed to be in early June, could be a paradigm shift between the cyber cabs and the robo taxis, etc. That this thing goes pushing. That's the plan to go back into 500-600 range. So TSLL, its leveraged ETF, is going to go ripping. And we called it last October when I said Tesla would make a run toward 500. Consider buying TSLL. It was in the charts. Come down here at October. It wasn't after the fact. This is live class action right there. Expect Tesla to hit 500. Consider the TSLL trade. Remember, I can't tell you what to do, but what did it do? And I'll show you over here on our NinjaTrader. We have the software available in NinjaTrader 8. Fantastic. I even include extension retracement Fibonacci's on here and the Magic Fibo. So you go to drawing tools, you can see we have the MPA Fibonacci retracement, MPA Fibonacci extensions, just like I'm doing on the charting platform. And that's what these are. And last October, when this baby was sitting here around $8, $9 in October, see it right there, the day I put that on a chart, consider this, and it went from $9 to 41. That's the type of sweet spot trades we like to get into. And this one, we called the same scenario that I was nibbling early. I got in a little soon, but I kept telling you when we get below 15, that's a good area to start buying. And the lower we go, keep adding. I'm not just saying it. You can look when we go over here to my class over here. We not only in October did we say it, I showed you, but here when we came into, let's see if I can find it real fast. TSL trade is setting up again. Then we talked about right here. It's reaching our buy zone below 15. Ooh. And then I said, add more TSL, the lower it goes, which it went down to like 6. And now we're looking for this thing to go where? 500, 600, putting TSLL somewhere around that $45 to $60 range. Well, what if it's a dud and it goes to $30? Well, from $6, or if you got in a little into 15, that's still a triple to get up to 60. And if we don't go that high, then you get in around below 10 and that 15 zone. If you bought it at 15, you're talking more than a double if it goes to that $30 range, which I think is going to go well beyond that. But that's the type of thing we talk about during our chart analysis. Amen? So let's go back over to the charting platform and let me get up TSL. Well, I'll actually go to NinjaTraders where I was showing it. But the plan is, just like in October did the big run, well, this thing should go ripping as we do the big release in June. And we go into the maybe blow off top toward the end of the year. This thing should go ripping higher. And if we break the extensions, that's where we're talking around that $45 to $60 range. That's my Fibonacci's up here. And then the last extension's up here in the $60 range. Got it? That's where that comes from. So rinse and repeat. And right now, if you got in off the lows, you're more than almost a triple as we speak coming in off the low. So I kept adding and adding and cost amortization. So I'm up beautifully right now, and I expect to be up much more, as they say, McDonald's, much more better deal. We're going to go much more better deal higher in the weeks and months to come. In the weekly's just getting started. So, Mr. Tucson, others, I suspect we're going to get this weekly to cycle up over the next what? 2 to 5 months. Kind of fits the script. What does 2 to 5 months put us into? Late fall, pushing toward the end of the year. And this thing could go ripping sooner because of the big announcement. But I own shares of TSLL. I'm expecting another one of these, rinse and repeat. Amen. The other one I'm very interested in because of Bitcoin still got a push to go to that 150, 175, 150,000, 175,000 target is Coinbase. Let's see, do I already have it on here before I change charts? So I don't mess up this chart. I'm going to go over here back to the charting platform and I'll show you that there. Here's the Tesla. So let's go to Coinbase and look at that reversal, my friends. Bitcoin's starting to reverse. It's starting to go. If you were around this service in the beginning, we talked about these lows. And then even as we came back and retested this $100 zone in here, actually went a little bit lower. This was a big buy area. Went up to 350 plus. Now we got this correction. Now we're looking for the next push into the upper 400, maybe even pushing 500 by the time we're done. So whether you buy Coinbase at its current price of 260, when we talked about loading it up at $100 and during that crypto pullback, and then we said the CONL. Look at this gem. We got down into the single digits and we're almost quadrupled from the low already. That's the power of the MPA PE5 version 5.0 software. That's the power of technical analysis. And I have a God-given talent to read and interpret price on a chart. And it's not my predictions, but it's my anticipated market forecast that typically do come out and play. And again, I try to give you insights. It's tough to give it exactly when is it going to get up here. I can't say exactly when, but we're looking at the fall area when Bitcoin goes ripping up to that 150 to 175,000 target. But we did say when Bitcoin was below 20,000, I know I'm on CONL, but I like these leverage ETFs. So instead of buying like options on Tesla, I rather buy shares of TSLL because the prices of options for these big dogs are still very expensive. And we were able to get in at TSLL for $5, $6 a share. When it went down to $6, I was like, back the truck up. And the same when this got into single digits down here below 11, that little battle zone area. Man, this was the same thing. It's going to go ripping higher because the Coinbase is what this is based off of, is expected to go up to the 400, maybe 500 range by the time it's ending. So this is kind of my TSLL, CONL dual trade that are due to go ripping higher. And if you were in this earlier, you would already almost quadruple your money from below 10 to almost triple your money at 30. Isn't that a thing of beauty? Came down into the $9 range. What a thing of beauty. And it is a quadruple from 9 to 428 zone. How about that? So in closing, I do think there's a lot more upside. Again, I can't tell you what to do, but I own this and I own that. And I'm looking for a lot more upside. No matter if I'm looking in the MetaTrader or NinjaTrader platforms, the same is the same. I expect to see more. And I started this, and I'll go back to my TSLL. Bring that back up. Beauty. Amen. Once we clear the hurdle here on this weekly Magic Fibo, once we start breaking above that, would not be surprised before we get up to these extending targets. We go breaking above, we retest, and then go bazooki, ripping higher into, could be as early as next month. We start ripping because of its Tesla's big announcement on the cybercab, robo taxi, etc. All right, everybody good. Let's continue. What about our other markets, such as black gold, Texas T? Then we'll get into crypto. This is grinding in this zone from the low to the high. It's been testing the 618 for another little pop, but I really would like to see one more flush down in the low 50s, at 52, 53 area, maybe as low as 50. So be careful on this bounce. Yes, I do expect to see some more upside, but is it first we're going to get that last flush? All this overlapping chopping action going back to this May 2023 low, all of this overlapping chopping action, we said, man, we need a new swing point low. I kept calling for it, and I was like, get to a position of authority, look for this thing to go make a new low. When it made this new low, it didn't hold 60. I said if it didn't hold 60, we're likely going to eventually come back to 50. And sure enough, we dipped to 55 and we bounced. We kind of retested it and we're bouncing and we're still stuck. If you zoom that in, let's go to a daily. We're kind of just stuck between lower highs, lower lows. Right now, got that trending lines. So this is why I'm still thinking we need one more push lower. There's that lower high trend line. And most recently, from the latest pop to this one, we're kind of holding lower high trending line. So I really want to see a flush. The good news is, if we do flush down to the low 50s, 50 range, this is a salivate country for the big bounce to come. And what sort of bounce are we looking for eventually? Well, you got to go out to like a weekly chart and you bring in the big picture from all-time highs over here. And there's two pictures here, but this from the high to the low, we're looking at about a 618 retracement. Somewhere around that 95 to 105, maybe is upwards of toward 113. So I'm looking for black gold to make this retracement sooner than later, but no later than later, where we go ripping up into the 90 to 100 plus zone. Kind of fine tuning somewhere around 90 to 105. Amen? So somewhere about a 618 retracement, which is right at 100. But I really would like to see one more flush. That's the key. One more flush, then we get a nice big retracement up into this zone. And that would be a nice pop on black gold Texas T. This could be the end and we go higher, but we got a lot to prove as you drill back down. We do have those trending lines we got to break. And we need to see this most recent price action. We can rinse and repeat this over and over. But Randy, we're stuck below 618 from the recent high to the recent low. We're just tapping on that 618 right there. And we're failing. So the more we see that, and we start taking out this swing point low, the prior low, then we're likely to come back into this zone. We don't hold that. Then I think it's inevitable we're going down at 53, 52, maybe as low as 50. Why am I getting excited if we get this last flush? Because we're going to have a monthly oversold, a weekly oversold, a daily oversold, and it will set the tone for us on the software side to set up a nice move to the upside. So let me go down here to black gold Texas T. here. Our daily's just kind of grunting and grinding. So that's what I'm saying. I don't mind us kind of finishing, grunting and grinding and finishing this last bit of cycle up, get sucked and pulled into the Magic Fibo, which is still at a lower swing point, right? Lower high. Got a lower high, lower low, daily cycles back down, and then we meet in terms with our weekly, which is in oversold territory, and our monthly, that is in oversold territory. So I really want to see that flush down. But what if this isn't the flush we're going to get? Then technically we need to break that prior swing point. And this one right here is the one of interest, is this guy right here that we've been testing, failed, testing, kind of failing. So we can get above the cloud if you're Ichimoku kind of guy or gal, and we look for this to finish cycling, then I would look for this pullback. Maybe we get it then. So I won't say this is definitely going breaking out here, but if it does and my daily gets oversold, we get a cycle down, that is salivate country to buy. Because by the time we get down to that low 50s to $50 range, the daily's oversold, the weekly's oversold, the monthly's oversold. That's when I love the trifecta to then go much higher and that much bigger degree retracement. Got it? So that's why I got to show you the bigger pictures so you can see what we're thinking about long term. This will take a while to do it. And we're looking longer term, make a run toward this 100 area. But first things first, love to see that lower high, lower low, then buy and look for the big push, as the software will have daily, weekly, monthly oversold. All right. What about gold? Be careful. Gold's following our map almost to the T. Check that baby out. Been warning you, gold's due to come down to the Magic Fibo, not on the weekly, but on the daily chart. We're going to go to the daily in just a moment. But I just want to show you this bigger picture. I kept warning you when we were blowing these all-time highs, man, gold's due for several $100 retracement. We're talking minimum 300. And it kept going even higher. So the daily Magic Fibo is more than 300. But we already went from basically, looking up here, 35 down to 31. There's your 400. We still got more to go. So this is what I think was transpiring. We're doing this correction. Remember I called last week in class? Look for gold to go down to 3150 and then start retracing back, probably in a little three-wave type of move toward that 3350 area, Harold, in which we then get a reverse and go down to the daily Magic Fibo, which is in this 2700 range. So let me show you on the daily chart. This is what we believe, and this could take a few weeks, obviously, to play out, but it's fitting the script very nicely. So we said we'd dip down into about 3100, 3150, and then what? Reverse to go back to 33, maybe 3350, kind of this little resistance zone up here. And this is probably going to end up doing another little correction like that. And then once we get up here, I think we're going to come down to visit our Magic Fibo at least. And that is in right now, upper side of this 29, lower side's in the 28s. Could even dip into the 27s where we originally were during this correction. We started talking about it. That's where the Magic Fibo was. So as we start to chop and grind and grunt lower, this thing could flatten out, maybe even start to turn down slightly. And maybe we do come back down into that 28 zone before bouncing and going higher. Amen. So be real careful with this. And what do we talk about this? Potentially you could use the UGL, buying this little dip, and said we could buy here and look to sell when we get up around that 143 area. This is pro shares. and we're down in the 120s. Now we're up at the 130s and looking to go toward the 140s before we then look for that next push, right? So we got our beginning of the move. We're looking for a lower high, lower low. But short term, we could be buying these shares, and when they go up, sell them. And then when we come down here and we're visiting, this would be a good buying opportunity at much lower low prices for when gold goes breaking out again. But there's ways to play these type of moves other than buying gold at those, extremely high prices. Amen. There are many ways to play this. Amen. So if you bought this with the expectation we're going up here in the 140s, okay, but once you get up there, be sure you take your profits, sell, and then look for a push lower to then buy at a much better price with a much bigger bounce yet to come. So I do think going back to gold, we're looking at this retracement to end up somewhere down in this area. If that doesn't hold, then we start going toward the 3-day, maybe around that 25, 2600. And if that doesn't hold, I really don't think we're going to go that much lower. But the lower gold goes, the more you go to Costco and buy gold bars or however you want to play it, or you can use the leverage ETFs, GLD, and some of the other ones, or a smaller one, GLDM. If you want micro shares, there's many ways to play this. But look for this correction to finish in the coming weeks. Push up toward that, 33/3350 area. Then another push down toward the Magic Fibo. It's an absolute necessity to have your Magic Fibo on your charts. And as you can see, I have it on all my charts. I don't do anything without the software, and I don't do anything without the Magic Fibo. Amen? Any questions on that? Silver. I love silver. I think silver is going to make a lower high, lower low. I'm looking for when gold gets the flush down to that 29, 2700 zone. I expect this to get a flush down to ideally below 25. That's my anticipated move. We come below 25, so I have junk bids to buy SLV shares at 25 and lower to set up the move in the coming year plus plus. Could be year plus or sooner, but the goal out, obviously from this weekly chart, from this prior high, all-time high to the COVID low, we already took out the 618, so the rule is you close candle body above that, and this has not only a weekly candle, got a monthly candle, daily candles, got everything we need to tell you, my humble opinion, there's no question we're going to $60 to $70. No ifs, no buts, no ands, no exceptions. But if gold gets the flush we're looking for, this is likely going to push below 25. And I'm going to load more SLV for at least a double plus to triple. And if we push down to say 20, then that's a triple to get up here, almost a quadruple. We could go much higher than that, but this is my target right now that is screaming, we're going. It's a matter of when. So that's why I like buying SLV shares, holding them till we get up to that target, then I'll sell it today, tomorrow, next week, next month. Do I honestly think it's going to be up here today or tomorrow or next week or next month? No. But by the end of the year, maybe by the end of 2026, much better opportunity to be up here by 2026. But you get the point. That's why I buy these shares and don't have to worry about option expiration and time decay. Any question? This, in my humble opinion, is an absolute. I want to see the 25 dip or lower, set up more buying, add to my position, and look for this to go. Even if you buy it right now below 30, you're still looking at a double minimum. How cool is that? A double minimum. Looking for that move. Any questions? Let's continue. And this is it's not a matter of if, Alan, or when, not if, when. Could it be by the end of the year? Maybe. We get that grind higher on ES, right, Harold? We get this grind higher and it goes pushing higher now without my pullback I'm looking for. Then Houston, we got a problem. We could have moving in toward the end of the year, we get that big Elizabeth, I'm coming to join you, honey. And we go breaking out to all-time highs without my three-wave pullback in here. So, Alan, if you're trading the ES or futures, go back and look at the archives. But just a highlight, we're looking for a three-wave correction to come down about 5250, somewhere between 5400 and 5000. Sweet spot right around that 5270, 5300 zone right in here. Three-wave correction followed by the blow-off top going to 64 to 6600 through the end of the year. Then we get the Elizabeth, I'm coming to join you. But if this baby goes just grinding higher straight up without any type of pullback, then that's setting the tone like I showed in the beginning of class. This SPX back in 2007, we got this little, looks like identical price action to what we have right now. Now I'll go ahead and zoom in there. Why not? Rinse and repeat. The more you hear it, the more you see it, the more you'll believe it. That this baby doesn't look like much, but this price action looks exactly what we're going through right now. But it's happening on a higher time frame right now, which exaggerates this. So we had this kind of pullback to a new high. Then we got the big sell-off and we bounced off the 3-day. This current one, we did exactly the same thing, but we came and we bounced off the weekly, not a 3-day. And then we're doing this recovery. That's why I want to see a three-wave correction followed by the blow-off top, as opposed this thing just keeps grinding. It made a slight higher high. Then we got our Elizabeth, I'm coming to join you, honey. And what happened? Look out. Look out below. Look what this thing did. Went from 1500-ish down to 600-ish. Ouch. That was our monthly cycle down on the software. PAI trend momentum, that's the last time we had a big full monthly cycle down. But this same scenario looks awfully eerie to what we're experiencing right now. And let's see if I can do it on this one side by side. Go to SPX. In the current action, we had the same kind of pullback, followed by a new all-time high, followed by the big pullback, and this goes to the 3-day, where we bounced, the weekly, excuse me, where we bounced off the Magic Fibo this time on a weekly, not the 3-day. So here's the 3-day, where we made a new high, pulled back, and then what? Bounced off the 3-day, went and made all-time highs again slightly, and then the big one happened. Versus current action on a weekly chart now, we got the same kind of reversal, same kind of big push higher. That's why I want to see this baby fizzle, three-wave correction, followed by the blow off top. Then next year, we go into the Elizabeth, I'm coming to join you, honey. Otherwise, this keeps going. We're going to get the same result. We're going to go down to 3,500 or lower, which is the monthly Fibo minimum. Look out. So I prefer to see the three-wave pullback followed by the blow-off top into the end of the year, early next year. Then we get the big one, as opposed this baby just keeps climbing and climbing and climbing to do what we did back in 2007, which is gnarly. You see what happened? And then you zoom this in to make it look like something. This looks just like that pattern. Now, past performance is not indicative of future result, but patterns always repeat. Hey, that's what Elliott Wave's all about. This looks eerily the same as what we see right now. Now you see why I urgently want to see that three-wave correction first, pull back to 5,400 area, and there's SPX way back then, but now pull back to that 53-ish area before going breaking out, because if this continues, it sets up the big one sooner. Then if we get what we're looking for, Come back to ES. If you do E-minis, let me bring this way back to where we were. Let me push that button right there. Boom. So this is why I think we're going to get that three-wave correction. So be careful. Hint, hint, hint. If we don't, that's even uglier. So that's why I'm desperately seeking that three-wave correction to come down into that 618 retracement from what? Swing point low, swing point high retracement. And remember, if you do have NinjaTrader, for those of you out there with NinjaTrader 8, we do have the Fibonacci extension relationship on the charts. So we're looking for the same type of thing. You'd click right, go to your drawing tool, Fibonacci retracements, extensions. So we're looking for from the swing point low to the swing point high. We're looking roughly for that same type of 618 retracement right there. Whoops. Somewhere between that 54, 52 area. A little three-wave correction. Could take weeks. And then toward the summer-ish into the fall, we get that blow off top. Amen? All right. So I just want to remind everyone these Magic Fibos are available on the NinjaTrader and the rinse and repeat Fibonacci extension retracements that are critical to be a part of your technical picture. And another reason why we're looking for that pullback, look at your daily, extremely oversold. So I want to see a little three-wave action. Daily cycle down would be beautiful. We get a little daily pushing lower, slingshot, engage, disengage. Where this comes down, it engages up, it disengages. Kind of like one of these over here, it comes down, engages, disengages before it pushes lower. So that's what we're looking for. This push lower in a three-wave correction that could last a few weeks into summer. And then we get the blow off top from, summer-ish, late summer to fall into the year. But that would be beautiful. Daily cycle down, daily cycle back up, go blow off top. Then we have a monthly, weekly, and daily all over bought, setting up the Elizabeth, I'm coming to join you, honey. And we go to the monthly chart and we look at how that could be setting up. So if I'm going to draw the Picasso, like I like to call this, I think this will probably end up slingshotting higher after we get our correction. This will go slingshotting higher to get us into that blow off top. This will go back into overbought as we move into the end of the year-ish. Then we get the big daily cycle down. Now, I don't have enough candles on here. I'd have to go in and pull more data, but I can show you in this MetaTrader chart on the monthly. The last time we saw the full oversold blowout was way back in the 2007 financial crisis, where the PAI trend momentum all went oversold. That's it. Last time here during the big pullback of 2022, money flow was only halfway. Trend momentum's made it, red and blue made it, but remember, a true cycle is the PAI, including money flow, and then the trend momentum. That's it. All right, so what are we anticipating in the future? I'm going to draw the software for you where it's going to be. This will slingshot higher. Maybe we get a couple little insignificant ones kind of like that to grind, or we get a couple of bigger ones, but we expect a correction followed by the blow off top. Then we get the big one coming in, and this will last for years as we pull way down and we get a big monthly cycle down. And how long does a monthly cycle take to cycle? 2 to 5 years. Amen? And what are we looking for? This baby to go all the way back to these Magic Fibos, which right now in the 11,000-ish range. So we can go from 23 to 11, more than half decline, minimum. And if we don't stop there, then we got some other plateaus over here, but that's why we're watching it. Amen? So again, be careful. I do suspect we're going to get that three-wave correction. I've been calling for it. for the last several days, pullback in coming weeks. Expect the gold to retrace to the day D1 Magic Fibo. That's what we just discussed. I put it kind of announced as much as possible. Careful, market pullback is looming. All signs are leading toward that. What else do we have? We come over here to our little oscillator. This is the how many companies above the 50-day moving average. We're into danger zone of a reversal. Let me condense this and bring this down for you. Remember this oscillator, when it's below 20, we look for market reversal. When it's above 80, especially pushing 90, we really expect this. So we can kind of condense this to give you a bigger picture. What it does, it doesn't like to stay up here long. And you typically, as an oscillator, you go from one extreme to the other. This helps me when I see this at extremes that I looked kind of like the software in a way. We get multiple time frames at extremes and we start hooking back down. Well, when this baby gets to 80 and 90 and higher, that's telling where we need to come visit back down here. And we did it during the pullback recently. And I warned you that we were going to bounce and make a move back up. Bingo. The 50 days saying it. You come over here and I'll do just looking at the heat map. They're all starting to say it. Look at the 20-day, 5-day. It went up to 90 and above. Still grinding in the zone. S&P, excuse me, go back this way. Move this out of the way. Here's the 20-day. It's in the zone. Again, it's in danger zone that we need a reversal. So we got these barometers telling us that this is danger zone. Remember, above 80, we're due for a reversal. Below 20, we're due for a reversal. Warned you about that the beginning of the week, month, as we started seeing in April. Look, this pullback is over. We need a pullback. And we started getting that 618 retracement. We said we're going to go to Magic Fibo up to the danger zone. We're pushing the limits. Now this is telling me on the 5, go back to this, 5, we're looking for a reversal. 20, 50. This one over here is midway. That's the 200. How many companies of the S&P are above their 200-day moving average? We're right in the middle. So bigger picture fits like a glove. And that would be, we get our, no, didn't want to do that. Let me go back over here. Close that. Move this. This is what I want, my arrows. Look for this during that little 3-wave correction, kind of get a little pullback here. Then we go blow off top into the end of the year. This would push this baby, which is a longer time frame, takes longer to do. But the last place we were was over extremes. So the next place we're likely headed is to overbought extremes. And this would fit fine with a little pullback here during the 3-wave correction I'm looking for. Then toward the end of the year, blow off top. We get this baby in overbought conditions, and we have the 200, the 100, the 150, the 50, basically the whole heat map telling us when we get to blow off top zone and these babies are 80 and higher across the board, look out. Short term, these are telling us we need a pullback. Short term, the software is telling you we need a pullback. Let me go back to that's black gold. But here's this one. Short term ES, that's NASDAQ, ES, daily. We need a pullback. That fits the tone for a 3-wave correction, followed by maybe a daily cycle down, daily cycle up, higher low, higher high. Then it pushes the weekly to continue to push, slingshot. Monthly continue to push and slingshot. And then what? Right there. We're going to slingshot. We're going to get the correction. Then we're going to slingshot higher, get that blow off top. Then going in from the end of the year, early next year, we start to get a multi-year decline. The monthly cycle's down, and we go hunting our Magic Fibo on a monthly chart, which we can do ES. Monthly chart is where? Below 4,000. So my call of record is before we break 7,000, we're going to break 4,000. And that means at least a visit to 3,500. And if that doesn't hold, maybe this could be a multi-year A and a multi-year rally B and then a multi-year bigger C. And we could end up bottoming with a lower low somewhere around this top action over here where we were back in the dot-com bubble burst and we were during the 2007 financial crisis. So if this doesn't hold, we got a few plateau areas in the 2,500 zone, and then we got another one down here about 2,000, and then we start breaking this low right there, 1,800 zone. That sets us visiting this breakout. And unfortunately, from the dot-com bubble burst to the time we broke out to new highs, 13 years. This is what happened on that 3-day chart I showed you right in this 2007. We're seeing the exact same thing on a weekly chart right now. So that could amplify this to give us a multi-year, pushing us into the 2030s. And who knows, maybe we come back down in that 15, 2000 range. Ouch. From 6,000, 64, 65, 6,600 down to 2,000. Yeah, minimum 35. Ouch. But we can play it to the downside. I love inverse ETFs. If you don't like, some people have a psychological thing about trading things to the downside. So you do the inverse ETFs. When this baby goes plummeting, those inverse ETFs go soaring higher. Many ways to play it. All right, let's continue. But the same is true for Yum. I call it Yum, Yummy. For the E-minis, $5 futures. I do think we're going to get the correction followed by a blow off top somewhere in that 45 to 50,000 range. And then we get Elizabeth, I'm coming to join you, honey. And we're talking somewhere around that 45, 50 down to the 20s. If we don't hold that, then we could come back down to this battle zone somewhere around the lower 20s and even the 18 where that little zone is. So I use Fibonacci extension retracements all day long. I use the software and the Magic Fibo on every chart. Well, let's see how that plays out. And last but not least, jump into the crypto. And again, every 4 years you get crypto halving. The next one is in 2028. During this pullback in 2024, we said 12 to 18 months, which puts us into late fall, September, October. Bitcoin should top out, if not sooner, by then, somewhere around that 150 to 200, 150 to 175. Every 4 years, Alan, this is when you buy crypto. Every 4 years, we've bottomed. We bottomed over here in 2014. We bottomed in 2018 here, then in 22, most recently. That was the crypto winter lows every 4 years, 18, 14, 12, right there, 12, 12, 16, 14, excuse me, 14. That was just part of a dip. So we're going back here. So right there, and 14, 20, 18, I'll do every 4, 14, 18, 22, most recently. And then what does that mean moving into this? Well, it sets up after Bitcoin makes its surge, we have the nibble zone, and I'm already giving you a target. Talking about armchair quarterback? No, this is year plus in advance. Bitcoin should rip up somewhere around that 150 to 175 target is the plan. And then we're going to get the crypto winter as we move into late 2026 pullback. Why? We bottomed in 22. We bottomed in 18. We bottomed in 14. So logical, we should bottom sometime late in 26. And my zone is somewhere for Bitcoin between 50 and 30,000. So just like years back in 2022, I kept telling everybody for months here while we were grinding, hey, Bitcoin below 20,000 is a steal. It's a crime to be able to buy Bitcoin at 20,000 or lower. We're going to 150, 175. And so far we reached roughly 110, 109 and change. We still got one more push, my humble opinion. Then we're going to get the what? Pullback for the crypto winter low. We top out every 4 years. We topped out in 21. We're going to top out in 25. Hint, hint, hint. Sometime late this fall is the plan. And then we're going to what? Bottom in 2026 because we bottomed in 2022. We bottomed in 18. We bottomed in 14. Then we topped in 13. We topped in 17. We topped in 21. We're topping in 25 to come. Got it? That's the plan. So my next big call, like we did down here, Bitcoin under 50,000 is going to be a tremendous deal. 30,000, closer to 30,000 begets the below 20,000 previously. And that is a crime to be able to buy Bitcoin at 30,000 if we get that low, right? So late 26, when we start getting 50,000 or lower, that's the time to start buying Bitcoin. Then we hold it until 2029, which is what? 12 to 18 months post the next halving in tentatively right now, May of 2028, which would put us into the September, October-ish toward the end of that year in 2029. So what do? We buy low, we sell high, we buy low, we sell high. Roughly every 4 years, when it bottoms in 26, we're going to buy, we're going to sell in 29. Then we're going to bottom and buy in 30, and then we're going to sell in 32, 33, right? So if it's halving in 28, the next halving will be 32, and then 12 to 18 months past that would be sometime in 30, 33. So we keep rinsing and repeating. Amen? Be careful. Now let's focus on current price action. If we get the correction I'm looking for, I suspect Bitcoin is likely to follow suit. It doesn't have to, but it's likely to follow suit. And if we start to see Bitcoin taking out these swing points, connect these little wicks down here, we start to see Bitcoin close below. Let's kind of get a price on that. If I can get my crosshair on there, that is below about 101 area. We close below 101,000, then we're likely going for about a 10,000 drop to go visit the Magic Fibo. So maybe we get the same kind of thing, three-wave correction along with the markets. We get a correction, then we go blasting off. Well, watch it because Bitcoin kind of consolidated here, made a pop. Then as I consolidate this a little bit more, we did it over here as well. We consolidated, pop, consolidated is the third time. Is this the trifecta? And we go up here to that 115, 118 area. Before then we get the correction. So either way, markets continue to grind higher. Bitcoin will probably continue to grind higher. But I would prefer to see a three-wave correction back down, visit the Magic Fibo, get a nice little retracement as the markets retrace to that 618 from the low to the high. Somewhere around that 618 would put us somewhere around that 90 to 80 range. Correction to then go blasting off for the blow off top into the late year in the summer, start ripping higher into fall, maybe end of the year, but that's the plan. And where are we going to end up? You can go back to the weekly chart. I know it's a lot of busyness on here and a lot of movement, but every time Bitcoin is done, just like the bottom every 4 years and the 22, the 17, the 21 topping over here, 17, 21 topping, the bottoming 22, 26, 18, etc. It also does a 10 to 20x. From the Bitcoin winter low, 10x puts us at 150,000. That's where that came from. Prior, we did the same thing. Then you throw in high to low from post-halving crypto winter highs to crypto winter lows, right? We always at least do a 618 retracement, 1.618. We did it last time right to it and then faltered into the winner. The previous time before that, we went a little bit more robust. We went up to a 272. So no reason to believe. And what happens to be the recent high to low? That's my 175, 1.618. So that's where my target comes from. The 150 is from 15,000, 10x is 150,000-ish. And then the high to the low, from the crypto high to the low, puts us at 175 is the 1618 retracement. Got it? So we learned a lot. Every 4 years, 13, 17, 21, 25, we top out. Every year we bottom, 14, 18, 22, 26. And I'm already giving you that nibble zone. And that again is 50,000 or lower. Look to buy some Bitcoin. In late 2026, already got a target for us. And then guess what? We'll have we'll have the high, we'll have the low as it starts getting in the nibble zone. Then we can use the extension high to extension low. And where's my 1618 target? It's going to be in the hundreds of thousands this next go around. So stay with us and you'll see where that high comes in. We get into 26 sometime, late 26. We'll start to have the beginning of the high into the low. And then we can start anticipating like we did this time, 150 to 175. The new target will be in the hundreds of thousands, but we'll have more accurate numbers once if we get in this zone. This is big time buy and then sell in 2029. We're going to sell when that baby's in the hundreds of thousands. Amen. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. And join us again tomorrow. That's it. And that's all. We'll see you tomorrow.